Sometimes it rains, sometimes it buckets down. Truly committed supporters stick by you through life's inevitable highs and lows. They stand shoulder to shoulder with you, no matter where life takes you. Cheer you on through the good times and the great and the bad times. They demonstrate unwavering patience, understanding, and encouragement. These unique values drive us at Asteron Life. We understand the value of committed support. We support our employees to achieve their highest potential. We support customers when they need it the most. And we support you to help grow your business. Asteron Life. Supporters for life.
Good afternoon and welcome to our product enhancement webinars. I'm Graham Hill, Executive Manager of Distribution here at Asteron Life, and we are really excited to be launching these enhancements with you today. Now, what we're about to showcase has come about through listening to feedback from you and also your clients, which has really helped us shape our thinking and developing solutions that meet your clients' changing needs. We believe the enhancements deliver on our commitment to the customer, sustainability and flexibility, which is at the heart of everything that we do. Now the team here from Asteron that are going to take you through these exciting changes are Kirsten Young of Stan Southern. Welcome, Kirsten. We've also got Josh Broadbent, the Business Development Manager based in sunny Cambridge. Welcome, Josh. And Chris Houston in Auckland. Now, under normal circumstances, we would have been travelling the country presenting these exciting changes in person. However, COVID has meant that we've needed to be adaptable, which is exactly what most of you, in fact, all of you on this session have been doing for the last sort of 6 weeks. And I wanted to acknowledge that COVID has certainly added a layer of complexity to all of our businesses and also to our mutual customers. Now, a little bit of housekeeping here. We've got quite a large number of people on this call, so we have muted everyone. But if you'd like to ask questions, please follow the instructions provided at the beginning of the session or the invite email that we sent to you earlier, because we really would welcome questions from you. Now, just before I hand over to Kirsten, there are 2 great benefits we introduced earlier this month that I wanted to highlight. Firstly, one of the enhancements we're actually going to be launching today, but we brought it forward earlier this month, which hopefully you've all seen, which related to adding premium holiday and premium and cover suspension options into our business suite of products. Now, through 2020, and I mean, what a year that was, premium relief for customers experiencing financial hardship got close to $4 million. And this included extending premium relief options during the initial COVID period. Many of those were actually your business customers who didn't have those benefits built into their policies. With the current lockdown looking more long-term than short, and the growing financial burden on business owners, particularly in Auckland, and the increasing number of requests for support that we're starting to get through here at Asteron, we sped up the release of this enhancement to the beginning of September, which has provided business clients with options to retain cover when experiencing financial hardship, particularly in these challenging times. Something else that we did earlier in September was to make available to advisors the full Best Doctors services, which incorporates the expert medical opinion, medical health navigator, and the virtual GP consult. Now, how all this came about actually started when we introduced Best Doctors with our income protection products in September of last year. And just for reference, we did actually pass that back to existing customers. And what we saw, immediately we started to get feedback, positive feedback from customers using the Best Doctors service, particularly where they sought an expert medical opinion. An example such as treatment paths being changed. And at the other spectrum, the reassurance that the course of treatment that they were going to be going through was in fact the right one. Now, at the same time, to get requests from advisors for one-off access to best doctors. And again, we got the same positive feedback. It was at this point that we decided excellent service to provide to all advisors. And we started to work with best doctors to make this happen. And today, this service is available to you. Now, if you are not aware of the fact that you have access to best doctors or you don't understand the benefits, please talk to your BDM or BDC. Now, on that note, I would like to hand over to Kirsten Young, who's going to start taking you through our exciting enhancements. Over to you, Kirsten.
Thank you very much, everybody. Welcome. So what I wanted to do right up front was mention that there will be no general premium increases as a result of any of the changes that we're going to take you through today. So just thought I'd get that out of the way. And that's because of our guarantee of upgrade benefit that's built into our policies, and it's going to apply where relevant. I also want to let you know that you will receive a copy of this pack to be sent out. It has the full details of all of the changes we're going to be talking to, including clarity on exactly what does get passed back. We've also allowed for a lot of time at the end of this session for you to be able to ask any questions that you might have. And Graham's referenced the webinar email that you're welcome to use that link. It's a separate link, and it would help if you pulled it up on your cell phone. That way you're able to log in and ask questions as we go, and we will add that into the chat and the conversation. Just a quick word that if anybody has any technical difficulties or a slowing down or buffering of your video, there's two things that you could do. We're told that it's possibly the size is going to be different for every household or business. So check on the video, bottom of the video link. You can actually adjust your settings and reduce the quality, and you also can just try the refresh button at the top line of your URL. Okay, so into some of the great details. What I wanted to do was firstly remind you of what our premium relief options are and for customers suffering from financial hardship, and then I'll talk about the enhancements to those. So our premium relief package has always been available on our personal product suite, and we certainly made a lot of new friends post-COVID last year when advisors started to realise that what was seemingly a small, simple detail could actually be the difference between whether their customers keep their cover or not. So the two options that we have available are our premium. So on our premium holiday, a reminder that these benefits this is allocated to our lump sum benefit suite. Your customer is fully covered while they are on a premium holiday, and it provides a 6 month, up to 6 months, allowing your clients the flexibility and control of using it when they need to. For an example, if they were to use 2 months, they still have 4 months left up their sleeve. Now, while there isn't a minimum period that they could elect, if it's not known exactly they may need that holiday for, and we'll check back in with your clients after that 3 months to check in and see if they still need that cover. Now, this stopgap helped a lot of customers last year, and it means that many have the relief of knowing that they can access any unused portion as well. From the premium policy and cover suspension, that is on our disability income benefits. Keep in mind that if you do trigger this, there's no cover while on suspension, and there's a minimum of 3 months and a maximum of 12 months on this cover. So we received, and most importantly across all of these benefits, I did want to add that keep in mind that we're not asking anybody to pay any of these premium relief benefits back in any way, shape or form. I think that's a big difference. So we did receive lots of comments back across the industry from advisors and customers. Two of the standouts, I guess, from my perspective, were the simplicity of actually making a claim and also the fact that it was seen to be market leading. Okay, so more on our COVID-19. If you were to ring fence March last year through to January this year, so over a 10-month period, we are so proud to say that we have supported 2,500 customers who were experiencing financial hardship, totaling nearly $4 million, as Graham mentioned earlier. 50,000 of those customers didn't actually have those benefits listed in their policies, and yet we found a way to make that option available for them if they needed it. You may be surprised to discover that 90% that we supported used the premium holiday and 10% used the premium and cover suspension. What we found was that many customers elected to use the premium holiday so that they can continue and keep that disability running. I'll now take you through, and it's another interesting fact, just as I'm looking at this, is that 82% of customers that we supported have managed to retain their valuable Asteron Life benefit as a result of this. So it's fair to say COVID is going to be with us for some time yet, but we absolutely are committed to you and your customers through these challenging times. I'm now going to take you through some of the changes made to our wordings to extend the financial support and offer that we give your customers. So you will have recently seen that we have now permanently extended our premium holidays to our business lump sum covers. Our policy wording has now changed, and the qualification criteria of this new benefit reflects a business situation and allows a reasonable discretion for us. The benefit is also passed back to lump sum covers in earlier versions of the business insurance policy and the Smart Series. And just like our premium holidays, we've permanently extended our premium and cover suspension benefit to our business and farmer disability covers. Again, the qualifying criteria reflects a business situation and allows us reasonable discretion. It also allows for a key person if they are on leave without pay or not gainfully occupied in a business. For this benefit, there's a minimum suspension of 3 months and a maximum of 12 months over the life of the policy. Also, we've reduced our stand-down period from what was 12 months down to 6 months, making this consistent with our premium holiday benefit. We're making this change to our personal insurance benefits as well and passing it back to all of our customers who have this. Again, changes are passed back to earlier versions of business insurance covers and Smart Series. And before I hand over to Josh, the last enhancement that I want to talk through is our grief support benefit. We've lifted the maximum amount from $900 and your clients can now access up to $2,500. This applies to our personal and business covers. While everything else remains the same, I would be remiss if I didn't remind you that you have up until 13 months in which to start your first session, and there's another 24 months from this first session in which you can complete the support. That is one of the most generous timeframes in the market. And this is where the devil actually is in the details. We all handle grief differently, and often grief can be delayed. So this longer time frame is an essential feature of this benefit. And when you put that alongside our best doctors, our mental health navigator, and our second opinion services, you have a beautiful, holistic approach to supporting your clients. I now am delighted to introduce Josh Broadbent. Josh is our Cambridge-based pediatric traumatologist. Over to you, Josh.
Cool, thanks Kirsten, and good afternoon everyone. It's my privilege to get to share with you our trauma offering. We've always had a strong offer, but we've listened to you, our advisors, and your customers, and these enhancements only add to our strength. Before we begin, we thought it was important to set the scene and remind you of what our current trauma package looks like and how it can be used to construct fit-for-purpose solutions and strategies to retain cover. For some of you, this will be a refresher, and for others new to Asteron Life, your first introduction to our offering. Our base level of cover is called Trauma Recovery Cover, and built into it is our early stage cancer benefit. You do not need to tick a box, it's there already. Then we have our optional benefits. Firstly, we have the early trauma benefit. It's a little bit of extra money and covers early trauma conditions that sit outside of cancer, an example being a single vessel angioplasty. As it's optional, your clients do not need to take it if they don't want it. Our trauma reinstatement benefit, this is our traditional buyback option, but we now have our continuous trauma benefit, which allows for 2 further full trauma recovery claims. So that's 3 full claims in all. It provides continuous cover, so no 12-month stand down. And as soon as you make a claim, it immediately reinstates for unrelated medical events or conditions. Your client does not have to go through the process to reinstate. It also reinstates any early stage cancer benefits or early trauma benefits if selected. So 3 years after we've paid the full trauma recovery, sum insured, for a cancer, the client could claim again in full for a different cancer type. And 3 years after we pay for a heart condition or stroke, we will pay the full trauma recovery sum insured for any subsequent heart condition or stroke, whether related or not. Lastly, we have our major trauma benefit, and this is for higher severity type claims, and I'll cover this in more detail shortly. So as you can see, these options allow for 3 simple levels of severity, multiple claims possibilities, and they're all together in one trauma recovery package, which makes our offering unique in the market. For those of you who have had a client claim for a trauma event, you may well have experienced the client pleading if they can get more cover again. They're now aware that they are vulnerable, and it does happen. In some cases, they're worried whether they'll still have enough money if the condition gets worse. This is where our major trauma benefit comes in. It's an affordable, standalone option that can be added to the base cover and is held in reserve just rates to severe levels or even another unrelated serious condition arises. The client can choose how much they want to keep in reserve depending on their personal risk tolerance. So what have we changed in this space? Our major trauma benefit had a limit of 3 times the base trauma recovery sum insured. As of today, we've now removed that limit, and the client can now nominate a sum insured of their choice, up to our $2 million limit. We've maintained the requirement to hold a base cover trauma sum insured of $25,000. This minimum is required for a couple of good reasons. Firstly, premiums would need to increase to cover additional costs as a standalone benefit. Major trauma is on average 35% lower than trauma recovery. Customers appreciate this, and we want to keep it that way. Secondly, our claims experience from earlier definitions tells us the customer experience is poor when they suffer a trauma condition but no claim is payable. By having this $25,000 base cover, they receive something when the trauma recovery criteria is met and it becomes a positive experience even though the major trauma criteria is not triggered. Some more key points about our major trauma benefit. 17 conditions match our trauma recovery definitions, and major trauma pays out at the same time as those. 28 conditions have a higher qualifying criteria trauma recovery. However, some of these definitions are not as severe as other high in severity definitions out in the market. For example, a major trauma benefit cancer claim is triggered at stage 3, not at stage 4. Where possible, we don't believe a cancer claim should only pay out once a condition is terminal. And remember, cancer is the single most highly claimed trauma event. Nor do we believe a major or severe type trauma is of any value if the insured has to exhaust all possible treatments before it will pay out. Because one of the key values of this very product is to pay for those treatments if need be. Our major trauma benefit does not have these requirements in our definitions. Having major trauma as a standalone cover means it does not get reduced by previous trauma claims. It's there in reserve for the big one. Furthermore, there doesn't need to be a certain time frame between an initial trauma claim and the time when you can claim for the major trauma benefit. Some similar covers in the market have a 6-month or 12-month stand-down period. Finally, major trauma benefit is on average 35% lower than standard trauma. This has a number of advantages, and it's a great tool that can be used to help clients with affordability and sustaining cover for longer terms. So let's have a look at some examples. We know that the average sum insured for trauma industry-wide is only around 100,000. This means many customers have less than 100,000 of cover. Let's say in this case, they have 80,000 at a cost of $52.37 a month. A great way to use the major trauma benefit is to reach up to the discount band and get greater overall cover for less premium. In this example, if we add 20,000, we reach the 100,000 discount band and the price drops. They still have the same base cover amount you were looking at before, but now they have more for less premium. This is a saving of $6.82. You could even take the major trauma benefit higher, up to 40,000, and total coverage of 120,000, and still save $1.68 in this example. The last example shows that for only a few dollars more, the total coverage can now extend out to 140,000. As we know, premiums rise rapidly with age, and many clients in their 50s and 60s will struggle with step premiums. Major trauma benefit can be used as a retention lever to reduce their premium. This will need a discussion with the client, of course, to gain agreement that some cover is better than none, so we could reduce the overall cover down and convert part to major trauma. For example, now you can see that the premiums have reduced substantially. However, the premiums are still stepped and will continue to rise again. You could also suggest that they use this reduction to convert to level premium and stop those price hikes. Now the premium is just below what they were paying, but it will remain level. And by the way, if the total sum insured does not increase, there's no underwriting hoops for the client to make these changes. Major trauma benefit in a business insurance sense. As we know, life and TPD fund buy-sell agreements or for business preservation. However, we've often been asked by you, our advisors, for higher sums insured for major trauma benefit to cover situations where neither TPD or life cover will be paid out. Recovery times may still be lengthy or the condition permanent or recurring. In such cases, the business may want to trigger a buy-sell or cover other costs. Some trauma conditions that could meet this situation are stage 3 and 4 cancer or open heart surgery or other heart conditions. With the changes we have made to major trauma benefit, this now becomes a far more affordable option. There are also a few occupations that may not qualify for TPD or business disability cover where this major trauma option could be considered. So what else have we done? We have now raised the maximum age for trauma recovery cover all the way past 70 to age 85. This means cover for longer for your clients if they require it. This is for standalone and accelerated, and also applies to the major trauma benefit and early trauma benefit. This option will be available for all personal and business insurance and Smart Life trauma recovery cover policy holders. Any accelerated trauma recovery that's on a level life cover that ends at 65, 70, 75, 80 or 100 can continue their trauma cover as step premiums until age 85. We are the only one in the market to specifically offer to age 85 on our standalone trauma recovery. New conditions being added. Firstly, it's important that when we add conditions to our trauma cover, that we consider the value that they will have for customers and balance that with the sustainability of the product long term. In this following case, this addition has come directly from a customer's claims experience, so we are confident we are adding conditions that will provide value to our customers. Aneurysm. Previously, an aneurysm claim was only covered under the early trauma benefit. In fact, there was a claim made very recently that qualified for only the early trauma benefit that made us rethink our approach to this condition. This customer had major open brain surgery, and the aneurysm actually burst during the surgery, so without it she would have died, and a lengthy road to recovery. This customer, with the support of their advisor, advocated for change, and so we're happy to have made a change that will be of benefit for future customers should they find themselves in a similar situation. A full trauma recovery claim is now payable when a client is required to have open brain surgery for an aneurysm. A major trauma benefit claim is triggered should the condition cause significant cognitive impairment where the insured is unable to perform 3 activities of daily living. This particular customer has been informed of the change, that others will be able to use their trauma cover to pay for the operation that saved her life is no small thing. And we're really proud we could make this change happen and that it's being passed back under our guarantee of upgrade benefit. It's a great example of where your feedback and advocating for your clients can really make a change for all of our customers. Our second condition that we've added is terminal illness on our standalone trauma recovery. Terminal illness has the same definition as for life cover, and obviously it will now trigger a claim for the major trauma benefit should the customer have this option. As a reminder, there is no premium increase for the addition of these 2 new conditions, and they are passed back to existing Asteron Life customers from 2004. And finally from me, some enhancements to our trauma definitions. We've made these changes to improve the ability to claim, remove unnecessary wording, and to keep in line with the industry. So firstly, stroke. This enhancement is to avoid declining claims that are quite valid and that require a long period of recovery. Our Chief Medical Officer has also commented that the spinal cord stroke suffered in one case had the same similar symptoms and side effects of a cerebral stroke and needed rehabilitation for a long period of time and currently still uses a wheelchair to be mobile. Early stage cancer. There's no material change here, but we have put in more clarity that we do cover SIN 3. Major organ transplant. This has been enhanced to include live liver donor transplants. Coma, option that the insured must be incapable of sensing or responding to external stimuli or internal need. And finally, peripheral neuropathy. We've removed the drugs and alcohol exclusion entirely. To note too, we regularly use our Chief Medical Officer to review our definitions to determine that our criteria remain aligned to clinical practice. And as I mentioned before, all these changes are passed back to policies sold from 2004 on the guarantee of upgrade. For the last section on product changes, I'd like to welcome Crush Houston, our Northern Regional Manager, and she will announce and explain some significant enhancements to our accidental specific injury support. Over to you, Crush.
Thanks, Josh. I am very excited to showcase the specific injury support changes that we have lined up for you on this important benefit. So let's start with what we have now in regards to specific injury support for your clients. It is an accidental injury benefit attached to a personal insurance disability income product. The benefit is linked to the sum insured of the monthly benefit and is paid for a set period of time, depending on the injury experienced. It's paid on a monthly basis, which is great for continuous cash flow. There are currently 21 specific injuries in the list, which range from fractures through to paralysis with payment periods from 1 month up to 60 months. Advisors like to use this benefit to complement income protection for certain clients, as it doesn't matter if you can work or not. The benefit also pays in addition to ACC. It is often considered extra valuable for high income earners where ACC weekly compensation is capped, or if they turn around and say, "I'm sorry, that's degenerative." It pays in the wait period. And when the injury benefit ends, the disability income can pick up and carry on if the client is still unable to work. Our flexible product structure keeps this as an optional benefit, which can be removed or added at any time, which is a useful retention tool later to reduce premiums for your client. However, it is currently only available to occupations that are eligible for income protection. So what's changed? First up, we have 8 new accidental injuries, bringing the total to 29. These can be seen on screen in blueprint and include additional fractures, multiple fractures from a single injury, burns and full loss of sight or hearing, and now a type of catch-all injury to include those requiring surgery under general anaesthetic that could miss out if it's not on the list. You'll notice that burns and paralysis are in italics. For simplicity and consistency, we use the same definitions as for trauma recovery, which is outlined in the policy document. So if your client has trauma recovery in addition to specific injury and meet these criteria, they will qualify for both. Loss of limb or thumb also means loss of use of. There is no amputation required. Multipliers range from 1 month up to 60 months, and you'll see the more serious events have more generous benefits, such as the loss of use of limb, paying for 18 months. And the time frame to have a fracture confirmed has been extended to 30 days, as we understand that not all people can get treatment immediately. They may get an initial incorrect diagnosis, or they may have difficulty in accessing medical treatment due to the geographic nature of where they live. So what's new? The value of our specific injury support benefit is clear through its popularity as an add-on to our personal disability covers. So we are very excited to be able to now offer a lump sum option for this benefit. It is available when a customer has a personal or business insurance lump sum cover, such as life, TPD, cancer cover, or accidental death. It can also be taken instead of our monthly benefit. Now, there are now 2 benefit names to bring clarity and avoid confusion. We now have inserted the payment type clearly at the end of the benefit name, designating it monthly or lump sum. So here are some key details. In principle, it is very similar to our existing if the insured person experienced a covered accidental injury. It is very much like the specific injury benefit that you already know. The benefit payment will be a multiple of the chosen sum insured, but paid in one lump sum, and multiples range from 1 times to 60 times, depending on the injury, and the injuries will match the multiples of the monthly benefit payment periods as well. The maximum sum insured is up to 5,000. So as a benefit example, a fracture of the femur would provide 3 times the benefit amount. If the client chooses 4,000 sum insured, for example, then the payout would be 12,000. The benefit expires at age 70, It is now available on either a personal or business insurance policy, or you may want to split it between both, as long as the total benefit does not exceed $5,000. This benefit can be added at application time or later down the track. A special form is available in our document library, and it's available to either add specific injury to existing cover, to transfer specific injury monthly benefit to the lump sum, or vice versa, all in one simple form. And we'd also like to point out that we are the only provider to offer both lump sum and monthly benefit options. This creates flexibility, so you can choose the best option to suit your client's needs and circumstances. This is valuable because, as we know, one size doesn't fit all, or doesn't fit all forever. Now for some aspects in relation to eligibility and underwriting. This benefit must be purchased with at least one other lump sum or disability. To be able to purchase specific injury lump sum, these are the minimum cover levels to qualify. So life cover or accidental death is $100,000, trauma or cancer cover is only $25,000. TPD is $100,000, and this could be own or any occupation, or even a modified definition of TPD, which is an option for occupations who may not be eligible for own or any occupation TPD, or disability income covers starting at $1,000 a month. Occupations that were previously considered individual consideration or uninsurable for disability covers are now able to be considered for this benefit. For example, actors, part-time workers, authors, art dealers, persons working from home. However, high accident risk occupations are still ineligible. A really great feature here is that this benefit has no medical, financial, or lifestyle underwriting. Any loadings that may apply to the main covers being applied for do not carry over into this new benefit option. And furthermore, we do not apply any generic exclusions or hazardous pursuits or degenerative conditions. So now to the premiums. Firstly, the premiums are charged at a flat rate, which do not increase with age. For eligible occupations, there are two simple base rates depending on the occupational risk. Quite simply, a high risk rate and a low risk rate. There is no difference between smokers and non-smokers, nor gender in these rates. Although the maximum at application is $5,000, the sum insured can go above this with annual CPI increases. Now, to receive the bundling discounts on specific injury, it does need to be attached to covers that are eligible for bundling discounts. And these are the same as the minimum sums insured for specific injury as well. Our bundling discounts are 7.5% discount for 2 covers and 12.5% for 3 or more. And just as a reminder, we will apply these bundling discounts across both business and personal insurance contract, and we have no policy fees. In our occupation guide, which is found in the document library in Asteron Connect, you'll find a list of all occupations and their coding for our different covers. Those ineligible for the lump sum benefit are marked with an asterisk. You'll note in this example, aircraft cabin crew, charter pilots and commercial pilots, while uninsurable for IP, they're eligible for specific injury lump sum. I'm going to take you through a couple of premium examples. First up, we have a male actor who is not eligible for income protection. Acting falls under the high risk rate, so the specific injury pricing is $9.11 for $5,000. This example includes a bundling discount of 7.5% discount, and that's because they have purchased both life and accelerated trauma at the minimum trigger amounts. Second up, we've got a male naturopath who works from home. So while a naturopath is an occupation that is eligible for income protection, working from home means he isn't able to purchase income protection. Now, this occupation falls under the low risk rate, so you see a premium rate difference of $3 a month between low and high for $5,000 worth of cover. And last up is our female bobcat operator, who is a smoker and would not be eligible for income protection due to the high risk occupation. Now, you can see that the specific injury rate of $9.11 is the same as our male actor. This is just showing you that there is no loading for gender, occupational differences, or smoking status. Now, all of these occupations aren't eligible for own or any occupation TPD. You may want to consider adding $100,000 of our low-cost modified definition TPD to access that 12.5% discount. You may find that this pays for the specific injury cover, getting more for less. Now, as this is a lump sum cover, it is very clean and easy from a tax perspective. The payments are not regular in nature, and the lump sum is a one-off payment, so it's pretty much the same as TPD or trauma, and therefore it is not tax assessable and the premiums are non-tax deductible. So why might you think of adding specific injury lump sum option? For those clients who may not want or may not qualify for disability income and therefore cannot use the monthly option. For any client wanting accidental injury cover but without some underwriting exclusions that may apply. Or a client may want added financial protection by being able to claim the disability income benefit as well as receiving the lump sum. Where they want a simple lump sum benefit that is non-taxable. Where the client wants to have more options available to them by receiving a lump sum up front so they can use it as their needs dictate rather than having the money paid over a period of time, this provides greater choice and flexibility. Being a flat rate, the client has certainty and consistency of premium with no impact of gender and smoking status on the rates. And where they want flexibility wish to receive is they can nominate any amount up to $5,000. This monthly benefit option is fixed by the disability cover sum insured, so it doesn't quite have that same flexibility. And finally, where a client may have another provider's income protection, or maybe group salary continuance or ACC, and just wants to ensure any accidental injury benefit will not be an offset. So you may be thinking about your existing customers and whether they should switch to the specific injury lump sum options from the monthly benefit, and there are pros and cons to both options that you need to consider. One of these is whether their occupation has changed to one that is still eligible. The other consideration is what rate they will be charged. For clients that currently have a monthly benefit less than $5,000, they can transfer like for like and top up to the $5,000 without underwriting medically or financially. For clients that have a monthly benefit greater than, must reduce their specific injury benefit lump sums or less. This is one form found in the document library in an updated illustration and an email to request. So whether it is our specific injury lump sum or our specific injury monthly benefit, there are some great highlights that I want to remind you of. We have added 8 new conditions, bringing the total to 29 and allowing for conditions being met that aren't just fractures and breaks. Flexibility of choice, whether it is a lump sum or a monthly benefit, you and your client has the choice to structure the right solution for your customer's needs and circumstances. A vast range of multiple factors from 1 month up to 60 months, allowing for more benefit to be paid when a condition is serious and greater financial support is needed. Bundling discounts applied when attached to covers that meet the minimum qualifying sums insured. The extension of our time criteria for fractures to be verified to 30 days, which meets clients' expectations and reality. Being able to switch benefit types if the other best suits. No medical or financial underwriting. No exclusions for hazardous pursuits, and also no exclusions for an injury arising as a direct result of illness, disease, or degeneration. And this is a big one that a lot of people are concerned about when it comes to accident cover, as the majority of accident cover people in New Zealand are exposed to is ACC. Our specific injury benefits will never have this exclusion applied. So all in all, we believe this is a really good benefit for those unexpected accidents that have an impact on everyday life. There are too many examples to list, but my husband crashing off a Lime scooter after a few drinks and fracturing his shoulder does come to mind as a great example of when this cover would have been handy for me and my family. Well, that's it from me and the end of the changes we wanted to bring you today. I am now going to pass back to Kirsten for any Q&As and the final wrap.
Thank you. Sorry, a slight audio issue. Crush, thank you very much. And Josh, thank you also. So before we break into questions, I'd like to summarise what we've covered off today. So our premium relief has extended to our business customers. Our trauma recovery has extended to age 85. All you need is a minimum of 25,000 of trauma to add major trauma up to a total of $2 million. We've included 2 new full trauma and major trauma conditions, aneurysms and terminal illness, as well as a number of definition enhancements. And as you've just heard from Crush, we've launched the new specific injury lump sum benefit. And we're currently the only insurer on the market, lump sum and monthly options. So lastly, we want to remind you that you will shortly receive a product pack coming through which clarifies all of these. We want to remind you that under the new policy document and our underwriting guide has been updated with the changes, and they are now live in our document library, as is Asteron Connect. And don't forget, our Asteron Connect offers a trade feature, so you're able to jump in and have a play to your heart's content, and we encourage build and lift your confidence. And for any to connect in with any of our business development team, we are here to help. So I'd now like to invite all of our team back to help answer your questions. And I'd also like to introduce Amanda Harlan from our product team to actually be able to assist us. Hi, Amanda. So, team, a reminder that using your app, you'll be able to ask questions, and you'll also have the opportunity to vote some of the questions that you have answered, which will raise the priority of them on the list. So let's get into some of the questions now. Let's see one at the top. Josh, I'm going to put the